So you've heard about COT and you want to incorporate it in your trading. Or you never heard about it and you're just diving deep into it now. In both cases, in this video, I'm going to give you exactly what you should avoid when trading COT. And most of the people don't actually know that. So stick to the end because I also have a nice tip that is going to completely help you that most probably you haven't thought about. So I've been trading COT for around 2 years, 3 years, and currently I'm funded with FTMO and CFT for more than 8-9 months with multiple payouts using COT data. And in this video, I'm gonna show you exactly what you must avoid when trading the COT data. So let's get into it. So the first thing you have to avoid is if we look at the charts, all right? I want you to see how the commercials are acting, all right? So let's take an example together. How we are going higher and the commercials are going lower, right? They are selling, they are selling, they are selling, right? Now, they are always basically selling, they are always gonna be hedging. Does that mean that you should trade with them all this while? No, that does not mean. The thing that you have to avoid is whenever you see the commercials moving, then you actually take a trade. You should not do that. You should wait. They are most of the time early. Okay, now when I tell you about number two, you're gonna understand completely why this happens. So I will continue just to show you how they are always early, right? So if we notice here, we are going down, right? Look at the price. It's going down, but the commercials are buying. Like look here, they are above where they have been for a while, right? So they are buying, 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 buying while we are actually going lower, right? So they are most of the time early. They will not tell you when is the turn point in the charts, but they will actually tell you to be careful. All right? So this is very important. Now, number two, the one that most people get wrong is the large speculators, the blue line right here, which I have. Over here, the commercials are the red line. So the large speculators are the big banks, the hedge funds, and they are most of the time using a trend following system. And this is why you see them all of the time following the trend until it changes, right? But let's say over here, or we can take this example, they kept following the trend, all right, until they had no one to buy the orders from, right? So the commercials are the one that are selling. Let's say we are buying, right? The large speculators are buying and the commercials are selling them those products. So they kept on buying and buying and buying and buying until there were no more because the commercials were completely sold, right? And the large speculators were completely bought. So it was like the end. This is when we get to something called an extreme position. So this is what we mean by extreme position. So for example, completely extreme, right? Because there were no more place anymore for them to buy or to sell. In both cases it goes. So the thing I want you to understand is whenever we have complete opposites, right? So commercial is completely bullish, large speculator is completely bearish. With the retailers, we start seeing the move. It's not like when a little bit bullish, right? Like we need to see extreme positions, right? So over here, same situation. The large speculators play a big role because they were giving all the force for the market to keep going lower, right? And then what happened? There was no more force anymore to go lower because there is nobody to buy from anymore or to sell from, whatever the case is. Over here, same situation. When we reach the extreme, this is when we started seeing this. Here, the same situation, all right? So here we saw the reaction. Over here, we didn't see it. We did not get any signal, basically, until if we look at the net, this could give us a better idea because we were very bearish from here, right? So this is why it cannot be rules based. There's gonna be a little bit of objectivity when trading the COT. And this gets me with to point number 4, which you have to basically avoid, is use COT as data, right? Use it to have it in the back of your head, but don't use it as a signal to enter or exit a trade. It's not that. It's gonna be early, right? You're gonna have to wait a lot, but the nice thing is that when the market is not ready, it will keep you out of the markets. And this is very important. This is basically more important than giving you the trades. So when you see those extreme positions, right? When you start seeing those extreme positions, you have to be aware that this trend is coming to an end. Okay, so if you are going with the trend, you have to be aware that we're gonna reverse soon, right? But patience will play a big role here. Why? Because it's not gonna happen in 1 day. It's not gonna happen in 2 days. It's gonna happen 1 week, 3, 4, 5. You don't know. So most of you think that there are opportunities in the markets every day on the 1 minute time frame, on the 15 seconds time frame, maybe. But in the long term, you have to actually wait for the right setup. So the biggest hedge funds in the world know that, and that's why if you look at most of their portfolios, they are not trading every single day and they are holding their positions, because the money comes when you are right and you continue to be right. You know, when you are wrong, you want to know wrong, you want to know that you're wrong quickly. So something very important is that wait until you get the reversal. Let's say in this case we were extreme commercials. I will not be buying here, I will be waiting. And if you notice, this is the extreme position right here that the orders started coming in, and this is where the market came and retested it. Okay, so this for me is the fake move, right? So we went higher, we reacted probably from a supply zone, and then we went lower, right? So it's not gonna be super fast. You have to be aware of that. We have to always as well look at, this is the extreme position, what happened after, why are we still going up, you know? We have to always be aware of those things. That's why I say don't use it as a signal. You have to always incorporate it with other things, you know? And if you think that you can come and trade every day, then I would say like research, backtest, find a new hobby, do something different, but don't just come to trade every day excited, amazing. Sometimes you're gonna find opportunities, sometimes you're not gonna find the opportunity. The market doesn't owe you anything. And the last tip I'm gonna give you, which the one I promised you at the beginning, is most of you never look at open interest. But open interest is vital, super important when you want to know when is the reversal coming. Because there's a big spike. Now people think when we get this big spike, so for example, we look before, like over here, we didn't have any spike all the way, right? And then we had it here, okay? So if I look here, let's look at it here, right? This is gonna be an area that I want to watch for, right? It's the actual equilibrium that we have over here, okay? But here we will not extreme, so this did not mean anything, okay? So when we have extreme positioning, right, with a big open interest, then we have to be aware. So what happened here is the open interest happened here, correct? Does that mean that this is the reason for the reversal? Maybe you would say no, but I would say yes, because this is the move that went higher, right? So the move came when the open interest was super high. So these are the orders after the open interest that came in order to come back, retest it, and go lower. So this is a small tip that I share with my students, with the community that I have on school, and it's totally free, guys. I have a private community, but this is not obligatory. Anyone who wants to get better at this, most of them enter the private community, but I also share so many valuable stuff in my free community, so you are more than welcome to join. I would be so happy if you do. And yeah, I'm gonna put the link in the description below, so you can join any day. And I do have, if you want to learn more about COT data, if you want to learn how to actually use them the right way and incorporate it in your trading, which is super important because you will have the real data positioning in your head. One myth that everybody talks says, like, it's on the weekly, right? It's on the weekly, yeah, but you will understand the trend. So when you go to the daily, you will have a better idea. If you want to trade on the 1 hour, you still have the idea. You still understand the conditions of the market, you know? So it's not that on the weekly that means you cannot trade it. And if you're on the 1 minute time frame and you're not profitable, then you're doing it wrong. Go higher time frame, at least 1 hour, 15 minutes, and then this is gonna help you. It's gonna be in your head, in the conditions, you understand them. Do I actually execute now? Do I have to wait? So treat it like a business. Tr- you have to wait for your setups. Not every setup is an opportunity. Some are not. So if you want to make money, you have to wait for the right setup. Now, if you enjoyed this, go ahead and watch my other COT videos that I'm gonna put right here, and I'm gonna see you there.